What is up, everybody? Decided to go on early to answer some questions. Welcome to the second installment of Modern Slackers, Modern Pillars to Success. I want to go ahead and show my screen here um, to show you what we're going over today, and that is why younger men should invest early on. There'll be some tips, some tricks, and hopefully a special guest from one of our panel hosts, Dylan, our crypto expert, because I'm sure he has a lot to say. Let me find that tab. Perfect. Modern Slackers. There it is. So we have defined pretty much the 5 modern pillars of success. On the last episode, you saw number 5, which is dating and relationships. And pretty much these pillars are designed to give you the best quality life that you could ever imagine, right? So if you're an entrepreneur, physical appearance is huge. You want to be dominant in the way you approach business. Today, we're just focusing on investing and why younger men should invest, and basically what that means for younger guys. So I do have some prepared questions that were pretty much sent through DMs. A lot of younger men basically have trouble finding figuring out how to filter out bad advice. When it comes to advice at an 18-year-old age, whether you're an athlete or an up and comer, maybe you're a rapper, I don't know. You're gonna get surrounded by bad people that are just gonna take advantage of you. But the same thing applies to the average 18-year-old that has his head on straight, that's focused on making a big investment by 25. So my biggest advice for how to filter out bad advice is to find someone with a professional investing background and make friends with them. I use this strategy in business. When I got started, before my first couple exits, man, I had to grind. Like, I would wipe the butt of the CEO of a company I wanted to start. And so make friends, use LinkedIn. LinkedIn's a huge networking tool where you can find someone that you click with, right? You really it's got to be a momentum based thing where you click with them. And these are going to be your top successors for, filtering out bad advice. You need someone that you can text to. Of course, you can reach out to our team at Modern Slackers on Instagram. We'll answer any questions that you do have. The second question I get quite frequently, and I wish I did this at your age. I'm not going to lie. At 18, I wasn't investing or thinking of investing. I was out there getting laid. Unfortunately, that puts you at a disadvantage. But if you're plugged in to, hey, I'm going to be rich one day, here's how I'm going to do it. This is where this advice really should sink in for you. Where to put your money? My favorite places to put my money is with people that are smarter than you are. And what I mean by that is you have so many different options. And I always mention Charles Schwab and Wealthfront. Charles Schwab requires a $5,000 minimum balance, and I think Wealthfront is 500. I use Wealthfront because it combines all my assets together, and I contribute so much money to these accounts because the investors that are managing the portfolio get a commission when they succeed. And these are Wall Street guys that are ahead of the curve. So that's just one place that I would put my money right now if I was 18 years old, and start contributing $50, $100 a week. I don't care if you have to work an extra hour, shovel your grandma's backyard. Start putting money away at 18 years old. The whole point of this is being able to have a sizable amount of money to make a big investment by 25. The next question we have here is how to prioritize investing. Okay, Robert Kiyosaki, I know the guy. Great guy. He taught me this in his book, Rich Dad, Poor Dad. It's called the Mercedes-Benz rule, right? So you're going to do a third of your money is going to be living expenses. A third of your money is going to be fun money. And a third of your money is going to be investments. And as your investment column grows, your fund money grows. And so does your living expenses. So picture a Mercedes-Benz logo, right? It's a circle, and then it has kind of 3 points to it, right? The bottom one's your investing, the other one's your living, and the other one's your fund money. And what I love about that strategy is you get to do whatever the heck you want with your fund money. You get to decide if you want to invest it or just rent a Lamborghini for a day. That's all up to you, man. and stick to the Mercedes-Benz rule. I'll try to get a printout for some 18 to 25-year-olds that are just starting out in investing. And if you can commit to that Mercedes-Benz rule, let's go ahead and dub it the Benz rule. If you can commit to the Benz rule by 25, if you're contributing weekly into one of these managed portfolios that are FDIC or whatever they call it, secured, these companies are big companies that you're dealing with, you're going to be in a position of power to make a big investment. Now, what do you decide a big investment is? Maybe that big investment is starting a company. You're going to need startup capital, unless you're, just want to wash windows for your whole life, or you're buying a house. That's notoriously the first way to create a net worth for yourself is buying a house. I bought my first house in cash, so it was a goal of mine when I read Rich Dad Poor Dad that one day I'm going to buy my house with cash, and I never looked back. So there's so many different routes once you're 25 years old. If you've done the groundwork at 18. Okay, for the next question, people always assume you need a ton of money to invest. Damn it, you don't. You absolutely do not. There's a story about a janitor. She was making $9 an hour and she invested like $50 a week, right? And imagine she has to go home and feed a family too. So she ended up with like $2 million in investment funds after 30 years. So there's really no excuse. People always say, I never have money. For those people, stop watching these videos. They're not for you. Like, I hate people, and I don't discuss and I don't waste my time and energy on people that say I can't. What you want to do is you want to say, how can I? Right? So today I can't lease a BMW, but how can I lease a BMW next month? What you're doing is you're telling your brain to, if you say I can't, it's stopping your brain. If you say how can I, your brain is activated. There's so much science and data backing this theory that just by saying how can I convinces your brain to get to work in the background. Have you ever gone to bed? I'm sure you have, and then woke up with an idea or you solved a problem as you woke up. It happens to me all the time. It happens in the shower more frequently than not, which is a weird place to have good ideas. But it's a fantastic thing to do, and that's is to pretty much just make sure that, how do I say this right? Is anyways, we'll just move on to the next question. The coffee's kicking in. So you don't need a ton of money to invest, guys. And at 18 to 25, you just need to get in the habit of making small contributions. If you get into that habit and that rhythm, I always like to talk about rhythms in football and in investing and entrepreneurship. When you're building a company, like, you got to get the team in the right rhythm. Get into the rhythm of making small contributions each week, and you will never forget it, or you'll never be ashamed that you did it. Okay. Outlets to invest. I always recommend having a variety of investment outlets. But 18-year-olds will need to have more cash before they can take advantage of them. There is always the goose egg opportunity. And that means, maybe you find a piece of real estate for 300,000 that sells for $500,000. Now, you got to be in a position of power to make those investments. And at 18, you're just, don't even look for them at that point, unless you have some cash on hand. Maybe your parents are helping you fund your first investment. Let's just pretend that you have none of those outlets. Just keep contributing to that weekly fund, so when you're 25, you can make a big purchase. Okay, now the dangers of savings accounts and how to unplug from that. I'm going to have a heyday on this one. Okay, so there's this concept about government printing money. I don't know if you've heard about it, but basically every time the government prints cash, the money in your savings account gets devalued through inflation. And it costs, you look back 20 years, 10 years, how much it costs for a gallon of gas. We're up to almost $5 a gallon where I live. So premium fuel, but it keeps, every time we print more money, your savings account means nothing. And we're always taught save, 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 save. But I would rather have $1 in my savings account and 100,000 in my investment account any day. And when you're putting money into the Schwab, into the Wealthfront, and any managed portfolio with professionals, I mean, these guys, their job is to make sure you don't lose your capital. You do assume some risk, but at 18, you should be doing only high risk with these guys. If you were 40 and you're watching this channel, 40 or 60, I would say, you kind of want to shoot for income, lower risk, but at 18, you can literally start over multiple times. So go out there, figure out what investment strategy works for you immediately. And, if you fail at it, guess what? 19 is right around the corner. Go do it again. No one cares. We're just trying to get you ahead of that curve. So unplug from the idea that savings accounts are good. Banks sell it to you. You see it on commercials all the time. They're terrible. Same thing with credit cards. At 18, you might have to use credit cards here and there, especially to get into an apartment or a house. But I prefer, if I was 18 and just hustling and making as much money as possible and then paying cash for my first house, which is what I did. So I never had to use credit. Another thing is you can build a business without all that. If you're at 20 working 50 hours a week, and contributing to a portfolio, you're going to have a bigger position of power by the time you're 30. Now, I do have someone that just popped in. It looks like Dylan is here. Oh, hey, Dylan. Let me add you to the stream. Dylan is how you feeling, big guy? I'm so thankful that you hopped on.
Yeah, I'm hanging in there. I don't know if you can tell by my voice, but
You
hit
look
hard
good though. Dude, if it's COVID, you're going to knock that thing out, man.
Hey, fingers crossed. Fingers crossed. I've just been doing the normal hydrating and relaxing.
See, I got vaccinated, and the vaccination, and I had COVID, then got vaccinated, and then got super sick. So, I
Oh
mean,
man.
yeah, where I live, everyone's like anti-vax, and I'm like, I wear this
Gotcha.
flag. I just blend in here with the flag on my head. They just think I'm like this super conservative guy, but and I got my vaccine passport. But anyways, I'm glad you hopped on, man. Let's see how
Yeah.
you feel out for a couple of these questions. Basically, just to recap, I was talking about younger men should start contributing to an investment account early on. Crypto is obviously the biggest thing right now. I mean, I've seen it. I remember there was a story, a guy traded 10,000 Bitcoins for a pizza. Did you hear that story?
Yeah. They have a day, so it's called Bitcoin Pizza Day.
Oh, that poor
And
guy.
yeah, but back then, one of the things is that it was just like this online thing. Like, it didn't have any value because it had never been traded for any sort of real world good. And so the
Yeah.
significance of that day was like, it was like one of the first times that Bitcoin was traded for a real world thing, kind of solidifying it as a potential money. So that's like why I
Wow.
look back and talk about Bitcoin Pizza Day,
I'm gonna put my
because it's
hat
like now is
backwards,
the time where
just
yeah,
like
that
you.
like that style.
Oh, I gotta have the hair show through though. No, it looks
Ah, yeah.
terrible. So Bitcoin Pizza Day, I love that. So
Yeah.
here's the questions I have for you. So why invest into crypto and not into a managed fund like Charles Schwab that knows exactly what to do with the money?
Well, I guess it depends on depends on your level of risk tolerance. And
18-year-old. It's an 18-year-old. They're
yeah,
dumb.
so for an 18-year-old, I wouldn't even get involved with that. Um, right, like, you're looking, if you at 18, you could, like you're talking about before, is you can take on a ton of risk at 18 and be fine, right? So you don't have to be super conservative with your investments and with your things like that. And what's happening right now is we're going through this huge transition from the old system to the new system with crypto. Crypto is like this escape valve to the fiat system. And so a lot of investment firms like Charles Schwab and things like that, they are focused on investing in the old system. And when you talk about inflation and all of that, that's artificially propped up so many of the numbers and investments in that old system. Like, everything's at all-time highs. So it's kind of a interesting and potentially dangerous position to be in, investing in that. So with crypto, it's simple, right? So with I always tell people with Bitcoin, you could just buy $5 of Bitcoin a day, and that'd be all you'd have to do.
Well, I'm
And
gonna start doing that now.
yeah, I mean, you can do more than five, but like, if you're
Uh,
just starting out, it's just like, I was listening to, I think it was Tony Robbins, and it was like some reel on Instagram, and he was just telling a story about, kind of compound interest, and he used a 10%, 7 to 10% year over year growth in an investment fund. He's like, look, if you put $300 a month in that for 8 years, when you're young, you'd be able to retire with almost $2 million.
I love that.
Yeah, and
So
so super
as
simple.
I yeah, no, I was explaining this Mercedes-Benz rule. I don't know if you caught on to that.
No.
Where So basically, if you look at a Mercedes-Benz logo, it has a circle with three sections, right?
Yeah.
And what I tell entrepreneurs to do, and I stole this from Robert Kawasaki, good friend of mine. I don't know if you've read the book Rich Dad Poor Dad, but I networked
Heard it.
my way all the way up to knowing the guy and being able to text him. So,
Oh, good.
yeah, and he taught me the Mercedes Benz rule, and I stuck to it. And basically, it says a third of your income is living, a third of your income is fun, a third of your income is spending. So, on the topic of young men and should they or how why they need to invest, they could assume what I said is you should go all risk out. I mean, in any managed portfolio, set your risk tolerance super high because at
Mhm.
19 you can recover, at 20 you can recover, at
Yep.
30 you could even recover. But I'm trying to
Yep.
keep guys out of there. I want 18-year-olds to be in a position to make a big investment at 25. So I think by what you just told me is we should add cryptocurrency into that risk tolerance, into
Of
that third
course.
segment of the Mercedes-Benz rule and under the investment category.
Of course. Yeah. I mean, the top investors and hedge funds all are starting to allocate to crypto because of its asymmetric upside, right? Its risk reward profile is so good that uh, you would be doing, like, if you're managing someone's money, you're doing them a disservice by not bringing it up and not considering it for a portfolio. And they're,
Yeah, I saw a Wealthfront. They're starting to talk about crypto now, and I'm getting emails, and I'm like, as you know, I took a big hit last year.
yeah,
Buy high, sell low, buy high, sell low, and
yeah.
and
I won't ask for too many details unless you want to share.
no, I don't mind. I saw I was gaming the system, man. I saw it going from 50 to 60, 50 to 60. I kept
Yeah.
buying and I kept making like $1,000 a day until I didn't.
Yeah.
But
Yeah.
until I made the big investment, right? And then I lost like $250,000 and sold at 30
Man.
grand. So again, I learned my lesson, and I'm
Yep.
very reluctant to jump back in. But I mean, I'm 30. I have investments. I'm
Mhm.
allowed to make those mistakes. So
Yeah.
at 18, the mistakes that they're going to make, unless they come from what's it called, a trust fund baby,
Mhm.
right? Unless they have a bunch of assets starting out the gate, I mean, there's nothing to risk. What are you going to risk? A couple $100 at
Yeah.
18 years old. So
Yeah.
that's kind of what I'm trying to get on topic with is like, crypto should fit in there. I just can't go against it anymore. And it's because
Yeah.
it kicked my butt last year.
Well, I mean, Bitcoin itself is up about 100 anywhere between, I think it's 130 to 170% year over year for the past 10 years. So, like, the returns are there, the data's there.
Okay,
But
I'm gonna
at,
tell you a story.
yeah.
About 8 years ago, I was using the dark net. I'm not gonna say why, and I had 8 Bitcoins out
Um,
there, and they were at $250, and the
yep.
site got shut down. And so that would have been $250,000 or something more than that,
Yeah.
and so I missed out on. It was the first Silk Road. I don't
Okay.
even know.
Okay.
Yeah, you know what
I
I'm
mean,
talking about.
I was a good kid back then.
I was not.
I was too cool for that. Like, I was thinking back because I graduated university in 2013, and like,
Congrats.
yeah, yeah, I guess it's a good thing. Um, but I like, no one I was around was like, everyone was like good kids. Everyone was like, straight edge, trying to get the jobs at like the big, the big four consulting firms or like the investment banks and all that kind of stuff. So no one was talking about crypto because crypto had that connotation of being um, used for nefarious activities, right? For drug deals and all that kind of stuff.
Right.
So I had heard about it, but I was just like, oh, that's what degenerates do. And I was, I had to pay the price for that, because had I done more with it, or had I like actually took the time to learn about it back then I'd be in a different place right now.
So yeah, no, me too.
Yeah.
And I have a friend that works at Google. Gosh, I want to say his name, but he made $10 million on crypto, and this guy rides a bicycle to work. Like he
Yeah.
lives so within his means, like it's insane. And he bought into crypto back when it was $200, and he
Yep.
bought a lot, and he's invested in the stock markets. He hasn't done. I own a couple properties. That's a big source of my income in the companies I operate. But he made $10 million, and
Mhm.
it's like, so how far are we going with crypto? How far are we going with Bitcoin alone?
Yes, that's a good question. So it's either going to zero or it's going to 100 plus trillion.
Terrible answer. I hate that
No, I
answer.
mean, that's how it is. It's like, so like, I'm obviously in crypto, and I'm a big proponent of it, so I don't believe it's going to zero, right?
Of course.
You have
Neither does he. He still
yeah.
has crypto.
So so the key is you have this asymmetric upside, right? The current market cap's like around two to 2.5 trillion dollars, roughly, and Bitcoin's around 1 trillion, and
Okay.
the market cap. So to put in perspective, the market cap of gold is about 10 trillion, right? People will say the easy comparison, a simple comparison, is Bitcoin is digital gold,
Right.
and the translation from something in the physical world to the digital world, think of like, physical maps to Google Maps, is you're going to be at
Yeah,
least two
I
times
like that.
better, times more valuable, at least, right?
Okay.
You can make a solid argument for that. So if Bitcoin's digital gold and gold's at 10 trillion and it's a digital version of it, so at least $20 trillion for Bitcoin, a reasonable argument.
That's huge.
Yeah. And so that is a 20x from where it is now.
So let's talk about I want to get people like 18-year-olds, right? I want to smack them into shape, and even if they invest $50 a week, would you say you and I could come to a agreement where 25 is going towards a managed portfolio like Schwab, and then 25 is going towards crypto?
Sure. Yeah.
I mean, is that something you would get behind and be able to tell an 18-year-old
I mean,
like good advice?
potentially. I personally don't use a managed portfolio from Charles Schwab or anyone like that. I actually took my money out of someone managing
Really?
my portfolio. Yeah, because I was like, it was a four. This one was a 401k, and so like,
Oh,
if you're working for an employer, definitely take advantage of the 401k matching and that kind
sure.
of situation. But I think you should only invest in the things you understand or you believe in long term. And so if
So
you're
I
just putting your money into
oh,
Charles Schwab just because you're supposed to do it, I think that's something you
right.
should question, and you should do the
Well,
research on that.
for the last 5 years, I've been getting 30% returns.
Which is great.
And a lot of that's COVID,
Yeah, yeah,
right?
everything's been inflated.
Historically, you're going to see 7 to 10%. And
Yeah,
I, I'm really nervous for 18-year-olds that want to put money somewhere and they decide to put it in a savings account because every time we print more money, their savings account drops, right? That's called
yeah,
inflation. So, um,
1 to
I'd
2% a month.
rather, I'd rather have them put it into a 7% historically valued Schwab year over year account than in their savings account.
Oh, and I definitely think that's better than a savings account. And I think
Okay.
right, you could think about the returns and you make, okay, 7% is better than, losing value. And so that's great. I think the most important thing for someone who's 18, 19, 20, who's young, trying to get started, is that they start thinking about investing, right? So they make that shift in their mind about, this money goes to my future, right? This
Right.
money is not just spending money, and they start building those habits at that age, so that they have time to build that up and to build that investing asset portfolio up as they start earning more money.
So
So I think that's
let's
big.
talk about that because I like what you said. What is the easiest method for I don't like what I don't want is I don't want 18-year-olds to go nerd out on this stuff. Like I want
Yeah.
them to be focused on a bigger goal. And if they do choose Bitcoin as their biggest goal, go for it. I don't care,
Mhm.
right? I That's where you're going to get a lot of attention from this video.
Yep.
So, what is the simplest way to invest into Bitcoin?
The simplest way, you're gonna get yeah.
Automatic. I want it
So
automatic. I
to
don't want
really
these kids even thinking about
yeah.
it.
So if we're just going simple automatic, obviously you should know what it is, right? Learn about it, watch some videos on it, tell everyone that, just because it's a good idea. But then if you're sold on it, the simplest way is doing something they call dollar cost averaging. So instead of, if say you have like $1,000, instead of just buying $1,000 worth of Bitcoin today, you break that up into pieces. So you get exposure to the price as it fluctuates, because it is volatile, but
Okay.
it turns out that it works out really well. So I use a service called Swan Bitcoin, and basically I just say how much money I want to put in Bitcoin each day, and then each week they take that money out of my bank account and then they allocate it daily, so I get exposed to the price throughout the week. And so that's something really simple. It's just set it and forget it, and super low fees. Like, so it's not, when you do just buys on bigger exchanges, you pay a larger transaction fee. You have to remember to do it, but just in general, just setting up and doing dollar cost averaging is really easy. And you can, I think their low end is like $10 a month. So you can dollar cost average with $10 a month or less. So really anyone can get exposure to this. And if you are like, oh man, I can't afford $10 a month, well, I can't help you there. But
Okay, I plugged the website. I'm
Yeah.
gonna call them and say they owe us money. So I don't understand dollar cost averaging or what you said, but I'm seeing on the
Yeah.
website that how it works. Oh, that's cool. Okay,
Yeah.
so yeah, I'll totally get behind that. So if I can find a way to get to 18-year-olds heads, hey, automate this process, put
Mhm.
50 here, 50 there. I'm always going to stick to my traditional roots of,
Yeah.
Schwab, because my net worth is a big factor that came from the last 3 years of Schwab and Wealthfront.
Yeah.
And a big loss came from Bitcoin, right? So
Yeah.
this is where the devil's advocate comes in. And but so if you mentioned going out and getting the right advice
Mhm.
and doing research, I recommend that to everyone. I do know with Schwab, I mean, you really don't need to. You send money in, they'll take care of it.
Yeah.
But that's a dumb way to invest for any investor.
Mhm.
So an 18-year-olds, I'm sorry, you're a dumb investor at that point. Until you lose 50 grand, you're not really a sophisticated investor. So I say definitely. How are you feeling right now, by the way? Because Jared's online, he can take over if you need.
I'm doing all right. I can do a few more.
Okay,
Yeah.
so Jared, we'll pop you in a second. I see you in there looking all fine with that beard. Let's go to the next question. I lost my train of thought again.
Yeah, no worries.
Okay, how much of a risk do you feel crypto is for a or for an 18-year-old, and why?
How much of a risk? I think it's
Yeah.
I mean, I think it's probably the lowest risk thing they can do for when
Wow.
it comes to investing. Because
Keep
you
going.
mentioned
Keep
before,
going.
like, you can get totally wrecked at 18 and you're fine. You can get wrecked at 19, you're fine. 20, you're fine, right? You can mess up years and years and years. Obviously, you don't want that to happen, but if it happens, you're still going to be fine if you've messed up from 18 to 25, 18 to 30, right? But you've learned throughout all that whole time. And crypto has the biggest upside out of any market, where everything else is at its peak. Crypto is basically an alternative system. It's an escape valve to the fiat system. And as long as they keep printing money, as long as inflation keeps existing, right? Crypto is still going to be, it's going to continue to be valuable. And as long as more people like us talking about this on the show, institutions getting involved, it's just going to continue to grow.
Yeah,
So
Starbucks is talking about accepting Bitcoin now, and
yeah,
that's going to be huge. So the
yeah.
more retailers you see use it, now it becomes something more tangible.
hmm And it also is one of the things is so one of the things that people don't talk about a lot and that's important is to understand the role of taxes and just governments and taxes on your assets. So if you're in an environment where there's inflation, your asset value is getting inflated, right? One of the things that can happen is governments can start to then tax you more on your assets to
Oh
reclaim some of
yeah.
that value. So a lot of the wealth you thought you accrued, actually you didn't accrue because it's propped up artificially by inflation. So it doesn't really actually increase in value, just relative to certain other people or
See,
certain other.
that's why I stick to housing, because I can
Yeah.
do tax deferred exchanges.
Yep. Yeah. Which
But an
those are really good.
18-year-old can't do that, right? So I mean,
Yeah.
I always I would love for every 25-year-old to be able to have enough cash to buy a house,
Yeah.
but what you're saying is a roadmap to get there for sure.
Yeah. Well, and then the thing with crypto, like a house versus crypto, like I'm totally for houses, and buying those and buying the right ones, doing it right. You got to learn,
Yep.
um, which ones are good, which ones are bad, and how in your own process for that. But something like a house has property taxes, has maintenance costs, and has all these things you gotta keep up. If you're renting it out, it has tenants you got to deal with. So
Oh
you have
yeah.
insurance and you got to deal with all this stuff with a house. With
Yep.
crypto, with something like Bitcoin, you can buy it and you just put it in cold storage and you're good. You just
So,
hold it. There's no
so if,
taxes, nothing like that.
let's say I bought, hypothetically, I threw 50K into, and maybe I'll do that live now. What if I put 50K back into Bitcoin and I just didn't look at it for the next 5 years? How would you respond to that?
I mean, it'd probably turn to 500 to $1 million.
I mean, just if I
500,000
did
to
not, and I don't even want to look at it. I
yeah,
just want to make the investment. I'm
that's what you
turning
should do.
away. Well, that's why I pulled out at 30,000, right? Because I was micromanaging
Yeah.
my investment account. Now, stocks notoriously go up and down, so it's
Mhm.
the same thing. Bitcoin just does it a lot faster.
Yep.
Now, the upside is I've never seen a stock besides we saw the Kodak stock went up 10,000% overnight. due to some publication. And I missed out on that. If I would have invested $1,000, it would have been like 300, 500,000. I don't know what it was, but
Yeah.
it was a 1 in a billion opportunity I missed out on. Crypto consistently stays in that everyday opportunity for so many people. So I'm going to let you go on that note. What is the best way for people to reach out to you for crypto advice?
Yeah. So the best way is my Instagram at Dylan and Bradley. That's probably the best way, or you can go to DeFiDylan.com.
Okay, so the one on the screen, is that
Yeah.
correct?
Yeah. At Dylan and Bradley's best thing. And just since we're talking about that, just a heads up is I'm never going to message you about crypto stuff. I'm never gonna be like, hello, hey dude, what's up? I'm never gonna like just DM you out of the blue. There's a bunch of scammers out there that they'll start doing this. I just had a friend that sent me a video of someone that was
Yeah, I just
messaging
saw
him.
one too.
Yeah, and they're very sophisticated. So go and like check out my profile and just.
So what if they reach out to you? If they reach out to you, are you going to respond?
Yeah, if you reach out to me and it's a legit question and something that's, or it's not like shilling a NFT project or whatnot. It's like a legit person asking a legit question. Yeah, at Dylan and Bradley.
I'm gonna screenshot this. I'm gonna screenshot this and sell it as an NFT. Can I do that?
Yeah, you can.
I just did. So we're gonna sell this for $10 million. That's my goal.
We can. Yeah, we can put it up on OpenSea right now. And
is that a thing? Okay,
yeah,
cool.
I can put it up there in like 5 minutes. You have an NFT of this.
What do you think we'd be worth? $5?
Yeah, we can charge whatever we want.
That is true, but not we won't sell it. Like there might not be a buying market for what we're trying to sell it for.
Yeah. Hey, yes.
Well, one day we're both going to be famous. So, hey, Dylan, thank you so much for being sick and hopping on. It means a lot to the show. Do you have any final remarks for 18-year-olds?
No, just learn about the stuff that we're talking about here. Learn about investing and just make a plan to do it. Start small, $5 a day. It's not going to hurt you, you know.
Oh, and do it through Swan.
Yeah, definitely. And you know, or if you check out my profile, I have a link to all the different exchanges where you can get free Bitcoin just by signing up.
There you have it, guys. Make sure to go check out his profile, check out his link tree, and utilize the tools he's using. I always, in the beginning, I was talking about where to get your advice from. Get advice from people that are doing it, right? Don't get advice from your grandma that knows nothing about Bitcoin. She's going to tell you not to do it, right? Don't get housing advice from a guy who's rented his whole life. You know, if you're going to buy a house, don't get advice from a renter. So, but other than that, Dylan, thank you so much for hopping on, and it's a pleasure to see you again.
Likewise. Take it easy. Appreciate you having me.
All right. You have a good day.
Peace.
Well, that was cool. Dylan's just a genius at what he does. And I always like to have him on the show, and the conversations we have behind the scenes, it's always motivating. I mean, he's reselling me into buying crypto, which I took a big loss last year. And so it's very great to have him on board, and maybe I will put an investment in. So I'm going to go ahead and add one of my good friends, Men Shrine, into the chat. How are you doing, big guy? Oh, I don't see your face, dude. What is going on?
Yeah.
I got,
dude.
Hold on,
I see myself fine. Yeah, I see myself absolutely fine. It's fine though if it's audio only. I'm kind of stuffed up too. I don't know if there's something going around. I'm down in Mexico, but I'm traveling tomorrow. Right. So I'm taking it super easy. Canceled all my meetings. I've been spending all day in sweatpants. I found a little stash of God's green herb that I need to go through before I get on a plane tomorrow. So that's been my day.
With the good censorship.
So I always before we get back on the topic, I always say, like, physically I don't get sick, and that's a mentality thing. But I do make a clarification that you can feel your body when it's just a little weak. It's starting to run down. Still went to the gym today because you need to go to the gym even when you're sick. But cut it back like 50% of what I normally do just to get the blood flowing, get moving, get the endorphins going. So I'm starting to feel better. But when it comes to sickness, a lot of people screw it up because they treat their bodies like shit. Like, people drink, smoke, eat crap, don't work out, and they're stressed out. Environmental stressors, emotional stressors,
and then they wonder
relational
why.
stressors, and they're like, oh, COVID, I'm so worried about it. I'm like, okay, guys, if you're worried about COVID, I'm going to get way off topic. I've been smoking all day. If you're worried about COVID, you need to be in the best shape of your life. There's no ifs, ands, or buts about it. Right. I know I have a flight tomorrow. For whatever reason, these airlines always put me in the middle between two fat people. And I know I'll have someone mention health to me. and I will look at me, and then I'll look at them, and I'll be like, you're the last person on earth that should be talking to me about health. So get that in order. I realized like, oh, body's a little weak. I feel something coming on. Had a little fever this morning, fighting it off. I will be 100% tomorrow to fly because I know my body. I will pass the COVID test. I might get stuck in Salt Lake tomorrow with you because I guess it's snowing. They're delaying a bunch of flights.
Yes,
so
let me know.
If so, yeah, we'll live.
Well, no, I'm 3 hours south now. I'm in St.
Oh,
George
I thought
right
you were
now.
in Salt Lake.
But I'm driving up there tomorrow. So if you are there, we're definitely linking up. And I took your video out because it was just blurred. It was frozen again.
Yeah, that's absolutely fine.
Right.
Yeah, I'll go ahead and let you know. But to bring it back around on topic, getting everything health wise together, and that includes your financial health. So I know the topic is investing.
18 years old. I'm trying to drill it into 18-year-old heads to start contributing to an investment fund, into crypto. Like Dylan mentioned, just start investing at 18 and getting in the habit and rhythm of making small contributions.
Yep.
Because if I were to have done that, I would have been in such a great position at 25 to make a big investment. Now, the reason I wanted you on the show, Jaron, is because Men's Shrine, is because you live within your means. You live in Mexico right now, correct?
Yeah, I'm doing the whole minimalist kick because
talk about that.
Yeah, my financial history has been all up and down. So as a kid, I grew up on a farm. I had my first job like when I was 7, trapping gophers, eventually got into harvest contracts. In my teens, I was taking crop shares. I worked at a video store in high school, and I was pirating movies on the side. Thank God I got caught when I was a minor, never got arrested, never went to jail, just told don't do that anymore. And then, of course, new technology. It's not necessary anymore. But had paper routes. I've never not had a job. And very early, I grew up with very conservative, like old school German grandparents. You always put money away. In fact, you live very meager. You live within your means. I was raised that way. However, getting to the age of 18, going out into the world, I remember looking around, or like even when I was a senior in high school, people started getting cars, and I'm like, how'd you afford this car? I know your parents worked for my grandparents picking asparagus. How'd you afford this brand new truck? Well, I never learned about financing because the way I was raised, if you don't have cash, you don't if you don't have cash, you don't pay for it, or you can't afford it.
There's people that pay interest. There's people that collect it.
And so the way my story is going is I grew up with these values, but 18 started, never financed anything through college, although I took on student loans. I fell into that trap. But coming out of college, like, well, you know what? I have a good income now. I came out of college with like $52,000 in my small town at the time. I was making more money than most of my friends' parents. So I was like, all right, I'm gonna buy a nice car now. Financed a car at 50% of my annual income.
Stupid.
Every kid does that. I lived in San Diego for years.
I
lived in San Diego for years. If you guys live in Southern California, you see like a Dodge Charger, Challenger, Chevy Camaro. You know, it's a young
Porsches
Marine
now. It's Porsches now. Now I see down there.
It depends. It depends on your background. So if you're like country boy, military background, then it's like the American muscle cars. If you're like a California boy, like kind of more pretty boy side, it's the Porsche. I've gone both routes. Like when I was in Texas, I had a Camaro, straight line, A to B, good fun. In California, I drive a Porsche, little 6-speed, because it's just fun to carve those corners.
Yeah, but it is. So with an 18-year-old, I really want to drill into the minimalist lifestyle so that they can set themselves up by 25. So what tips do you have for an 18-year-old? Because they're going to have those triggers and those, the Jones effect, where it's like, dude, my buddy who's 19 just got a BMW for $700 a month. And they don't see the $700 a month. So what advice do you have to give to those kids that say it's okay to drive a junker until you're 25? It's okay. Like, people just don't understand it. They feel like they're missing out. They feel like, oh, I'm less because I don't have what this guy on Instagram has. First off, F that guy on Instagram. He has nothing to do with your life. And that's all usually candid photos, or, that's the best version of themselves at all times.
It's the highlight reel of their life. Yeah.
So how can we convince an 18-year-old to live that minimalist lifestyle and not care that his friends are driving that, sexy BMW?
Well, it's hard to convince an 18-year-old because, especially at that age, you're not that mature yet. You don't have the life experiences, and it is really hard because you see the flashy car and you see the validation, and you're like, oh my God, I want to be like that. In my story, I went along that path too, played the good corporate role. I was very good at my corporate life. In fact, I'm going to dip my toes back into it because I need to finance some projects and get them off the ground. But I'm at a different level of my career. I'm higher level now, so I can do that.
Sure.
But for 18-year-olds, definitely the importance of getting your money right. And I'll get to it in this story, that I started getting to the point where I had the Porsche in California, had the high-rise condo, could buy the nice suits at a moment's notice. I could take off and go on a vacation. But I remember sitting at my condo alone by myself, looking out my beautiful panoramic view as the sunset went down. It's like, you know what? I really miss traveling like I did in my 20s. I miss backpacking. I miss doing the hostel things. I miss jumping off of waterfalls and really just living life. And you can't do that if you become a debt slave. And I had become a debt slave. So we're talking about investing, but the opposite of investing is really making money for someone else who does invest. I sell alternative commercial loan products on the side, and a lot of them are high risk. And people are like, well, why is it such high risk? I'm like, well, a lot of people default on these. And for our backers, these are high risk funds. So we have to give them a high return. Otherwise, we don't have any money to loan out. That's kind of how it works. So I fell into the debt slave lifestyle, which sucks because it's like this hedonistic track of like, well, I'll just increase my corporate salary. But when you do so, and I was just responding to someone in Rich's group earlier today, when you do so, your expenses go up too. You're like, well, now my $500 car payment can be a $700 car payment, or now it can be $1,000 a month because I'm well into the six figures, but you never actually get ahead. So
no, they call that the rat race. Robert Kawasaki,
that's exactly what it is.
He's I know Robert Kawasaki on a personal basis now, and he explains it very simple for 18-year-olds, and he drilled this into my head. It's called the Mercedes-Benz rule. A Mercedes-Benz is a logo with three sections, right?
Yep.
One
like
section. Yep. Actually, I like that. The peace sign. I don't know. I'm going to call it the Benz. It's more flashy.
Yeah.
The Benz model. One side is for living, right? A third is for living. A third is for fun money. And a third is for investing. As your investment column grows, so does your fun money. So does your living money. And this is the whole point of this podcast, is convincing 18-year-olds to have that mindset right now, right? And start off the bat.
I'll get to there soon,
At 25, that means you'll have enough money to make a major investment, cash on hand. That's what these guys need if you want to get ahead in life.
So I did eventually get to that point. I'm a very smart person, realized the error of my ways very quickly, started getting the money right. However, I've had a couple of my own business ventures in my adult life. One was successful. It was here in Mexico. Didn't make a lot of money, but by local standards, I did. And it just got dangerous. So I exited. A lot. Oh yeah. Oh, it was great. I'm in Mexico now, and I live like a king here because I learned how to navigate corporate executive levels at a very young age. I also went to a good school here and played baseball, so that helps too. But getting back on track, at 25 or so, I did invest. I went in with a buddy for like an alternative finance company, and we made a lot of novice mistakes. We didn't have any mentors. We had neither one of us had any experience before. Right before Dylan got off here saying that, don't take advice from anyone who hasn't done it before. Well, I was Mr. Academic, and my buddy's like, oh, I know plenty of people who've done it before. So we tried to emulate them, but we didn't have any experience. So we made three very critical, naive, non-experienced errors. And if we had made just two of the errors, or just one of the errors, or even the three errors, but in a different order or during a different time frame, we would have been all right. But we would have.
How old were you?
I was 27 when the business tanked.
Okay.
That started my red pill story, actually, because I was married at the time, and that kicked off my whole red pill transformation. And guys that follow me, you'll hear all about that. But
for sure.
So the business tanked, and I was like, oh shit. Well, I wasn't really happy anyway, so I wasn't glad it tanked, but it was essentially a refresh. So at that point, I went back onto like, all right, I paid back all my investors, thank God. All of my creditors, I at least settled with them to start cleaning up my credit. I came out of that with like a 380 credit score. I'm back up over 705 now, but I don't use credit anymore. So I went back to the way, and this is wrapping it all up. And I learned this in my red pill transformation, especially going into your late 20s. If you're going into 30 and you don't know who you are yet, that's a real rough time for you. You're like, oh my God, like I'm an adult. Like when you hit 30, you're an adult.
Yeah, you definitely
I need to figure this out. So I'm like, what do I do? I spent my whole 20s, like, I tried doing the vegan thing. I did the California thing, did the Texas thing, like tried to be the person everyone else wanted me to be and tried to fit into my niche. And then coming at 30, I had a rapid mindset change. And there's a kid actually living with me in California at the time. He was a young Christian
surfer guy, right?
I had two different surfer guys. So I put out targeted ads because I was tired of squatters coming into my place.
Sure.
So I put out targeted ads to like rich zip codes in conservative cities, and got amazing roommates doing that. Guys that are doing property rentals or whatever. If you're in a city like Las Vegas, San Diego, Los Angeles, San Francisco, run your ads in places like Houston and set it for the Memorial zip code. You'll get some
What about St.
fantastic.
George? It's like the most conservative place on earth.
Go to citydata.com, and then you'll look at the average income, look at the areas where there's low crime, high education, whatever parameters you want. And then you can actually run targeted ads on the Facebook marketplace for rooms. So this was one of those kids. He was a really nice Christian kid from Houston, got me back into playing music, spent all summer with him, really talked philosophy, morality, never pushed the Christian stuff on me. But in doing so, I started getting into more of that myself, just because when you meet fantastic people, you're like, all right, dude, what makes you tick? So this kid was solid. And
right. I gotta
really important.
I gotta bring it back though. We gotta stay on topic
I am.
Okay.
I am bringing it back.
Go for it. Okay.
So at 30, I was doing a refresh.
Okay.
I met this kid when he was 18, and he said one of the most important things to me that I wish someone had said to me when I was 18 was that, hey man, it sounds like you went out into the world not to conquer it, but to try to find yourself. But did you ever realize that you already knew who yourself was at 18? And if you just go back to that, you're probably going to be fine. And I was like,
whoa,
light bulb, like, oh, yep. So I went back to the like cash only, like you said, with the like the three, not quadrants 4, but the 3 categories of
yes.
finances. Radically reshifted my finance mindset, stopped financing cars, stopped using credit cards, no more revolving debt, nothing else. I don't carry any debt at all, and I never will, unless I need to. I'll get to that point, or I can extend lines of credit to people. But personally, I go back to my grandpa's way of doing things. Like, if you don't have cash, you can't afford it. That doesn't mean you can't finance it. Rich commented earlier, like, hey, I went in to buy a car in cash, and they gave me like a 0.04 interest rate. So I used that cash, put it in Bitcoin, and tripled that money in like a year. So whatever it was.
Sure.
So in situations like that, like I'll carry it. But if I don't have cash at first, I can't in good faith take out that balance. So it's recreating for you young guys these financial things. You can have a nice car, by the way. John, I was a little late on this because I was editing posts, and one of my posts was talking about, I've always had nice cars since I was a young guy. You just have to shop around the market, be willing to travel a little bit, know what you're looking for, know what a good deal looks like. Little things like when I got my Camaro 2SS, it was a special edition. I put a Google notification on there and spelled Camaro wrong, Camero instead of ARO.
Oh,
so when this listing came up at like midnight, I was the first guy on it. I was at the dealership the next morning and with cash in hand, ready to go. At that time, when was it? Yeah, no, when I was in Texas, I started doing the cash thing again. So I came in cash in hand, ready to roll, and bought the thing, and never even told the guy, like, hey man, you misspelled the car in the ad. So it didn't show up anywhere, but I found it.
oh yeah, of
course. So get scrappy, guys. Little tricks like these, think outside the box, but really, you have to be disciplined, especially when you're young. It is really, really hard. Like the guy, when I started my story, the kid in high school, it came in with a nice new step-side Chevy. I grew up out in the country, and the kid was Hispanic, but I like step-side Chevys too. I was like, damn, that's a nice truck. Like, how did he afford it? Oh, he financed it. So financing isn't affording it, guys.
Right. Jaron, how do I convince an 18-year-old to not give a shit about his friend who has the $700 BMW?
I think that's more of a mindset thing. What I was getting to when I wrapped up the end of my story is just keeping that internal frame that, like, I am fine with who I am. It's really hard when you're a teenager, especially through most of your 20s. It's hard too, because the world will tell you otherwise. And if you don't have any wins under your belt, or you don't have any confidence in life, it's really hard to not fall into other people's frame. We talk about that a lot in like the red pill type spaces, but you just have to be solid with who you are. And then, like, for me, when I got to the age of 30, I realized that, okay, girls actually don't really care about the car. They don't really care about the house. They don't really care about any of that stuff. I've been living out of a duffel bag all year, and I'm literally dating like telenovela models here in Mexico City. I get invited.
You know what's funny? I
want
to touch on that, because when I made money, like when I started making real good money, I started dating less women. I don't even know what happened there. It was like, because I was on a grind. I was on a grind, right? And like, I think that grind when I was poor was sexy to these women, and now it's like I have money, but I'm being disqualified for other things. It's like I
Well,
lost the
you're not as
hustle.
hungry. Yeah, you're not as hungry anymore. You lose that edge, because I notice when my back's against the wall, and think of it like a scared dog or an animal. When you have a creature's back against the wall, you get that energy, like that angst, that it's that fight or flight energy. And
Yep.
there's another F word I use in there too. It's that same energy. And
Yeah,
girls
well.
can feel that. Yeah, it's the fight, flight, or other F word
you.
energy.
Yep.
And they like that energy because they know when you have that edge, you have that hustle, you have that spark to you, they know they're going to get it. And I think they also like seeing someone on their ascent. So I use, for a lot of times when guys like, oh, I'm depressed. I'm like, well, depressed literally means that there's no forward movement in your life. So get outside, start moving, start eliminating things that aren't moving you ahead mentally. So really, when you look at these words, you realize, okay, they have literal meaning, but girls like a guy who's on his ascent. And when you're 18, I think it's important to remember that you're starting from nothing, and that's fine. But as long as you're moving forward, you're going to be good. And then I also learned coming into my 30s that that's kind of my definition of happiness. As long as I wake up and I'm 1% better tomorrow or today than I was yesterday, I find that I'm really happy. At the point financially now, I'm coming off a minimalist phase. So I'm like, oh God, it's getting kind of lean. And I love living with no expenses. It's awesome. But I go to Miami and hang out with guys driving exotic cars and people pulling up in yachts and inviting us out to $200 steak dinners. I kind of want that for myself too. So
Yeah, no, you've earned it,
my mindset's
Jaron.
shifting a bit. Yeah.
You've earned it. See, I have a very, very healthy net worth, and I when I totaled my truck, I bought a $13,000 Volkswagen. I just don't care. So it's like I come from that conservative background of using cash only. I could go buy something really nice, but I don't want to. I
And
just
I
don't.
did that all through college. I had a series of $500 cars. I had a $1,500 my first car, 1984 Camaro. It gave me a ton of problems. I got a reckless driving ticket, so I got rid of that. Then I had like a $500 1991 CRX in Eastern Washington State. Put some snow tires on that thing. That CRX would not break traction at all. You'd think it was a 6-speed. You'd think it was a stupid idea to drive a CRX in the snow. Au contraire, that thing held on. And I tried to drive that thing into the ground and it would just not break down. $500 car. It looked like crap. It looked like all hell, but I put 250,000 miles on that thing. It could not break it. And then eventually my girlfriend at the time, her dad bought it because he had a weird commute. And he's like, I see you trying to break that car and it's just so solid that I'll just get it off your hands. I had a $500 Eclipse, I think at one point through college, like 1996. I was in college in the early 2000s. No problems with it. I bought a $500 Volvo. They call them Bocho in Mexico, like those old school bugs. That thing, when you live in Latin America, you know that your car is going to get messed with, vandalized, broken into, or stolen at some point, and you just accept that. You plan that into your budget. So I had like a series of $500. Yeah, I had like a $500 car budget the whole time I was in Mexico. My first time, they all got stolen or wrecked or whatever. Now I just let me
ask you something, since we're almost at the hour mark. So let's finish it off here.
Budget too, guys.
I want to ask you a question that'll hit us at that 1 hour mark. I want you to tell yourself or the channel 3 things to tell your 18-year-old self on the topic of finances or investing. 3 tips. If you could go back in time and change 3 things, what would they be?
That's a great question. I think the first one, which was kind of the moral of my long drawn out story, is to trust your instinct. But at the time, I didn't realize I had good instinct. So I grew up a certain way and the world told me otherwise. And I went down a way that was incongruent with who I really was. And then I later had to find out that I was actually right the entire time. So I guess if you get to that point where you doubt yourself, like, well, I learned that, if I don't have cash, I can't afford it, or I probably shouldn't finance a car way outside of my budget with like a 16% APR over a 72-month term. If you're at doubt or you have your intuition, you're like, God, these are like bad loan rates, or I shouldn't be doing this in the first place. Trust your gut. I think that's one thing a lot of young guys fail at is your intuition is really loud. And if you listen to it, it usually doesn't lead you astray. In my life, whenever I don't listen to my intuition, I always pay. And not only do I pay dearly for it. So now my intuition is a locked in part of who I am. If I discover new things, I'll test out the hypothesis, make a new worldview, and then I'll actually lock it into my intuition and like make a mental activity of saving it to my gut. So trust your intuition. You might not know how to trust it yet when you're 18. That's fine, but at least listen to it. Which leads me to my second point is research. You don't necessarily have to have a plan, but you need to be curious. So when it comes into finances, know how these things work. If you're a college student, you're walking around campus and they're waving credit cards at you for a free pizza, realize that you're going to get locked into like an 18% APR introductory rate, and they're going to jack
Oh
that
yeah.
up every
Oh
single
yeah.
quarter for the life of that card. Before you know it, you'll have like 38% on that card. At one point, you probably swiped it because your debit card strip wasn't read at an airport terminal somewhere, and you have a $100 balance, and you let it go. And then you get something from collections. You're like, holy crap! I owe all of this money. How did that happen?
Oh
Well,
yeah.
it's called compounding interest, and it goes really fast.
That's why I love it on the investor side. I love
That yep.
investing for that reason, man.
So guys, and this is a good point to remember in your curiosity. I'd say get financially literate very early. For whenever you're paying interest, someone like me or John is making that money in the form of a return.
Absolutely.
And it's not an individual. It could be a collective pool. You know, banking gets really complicated, but whenever you're paying more than the money that was given to you initially, someone like me is making more on the money that I gave out to guys like you. So you want to be on the other side of the equation, and that's a mindset shift.
There's people that pay interest. There's people that receive interest. And
yep, exactly that.
And I mean, there's so many routes to go about it. I'm so traditional with investing. It's real estate. It's managed portfolios. I don't really gamble. I did gamble $8,000 on the Seahawks game and won, but I had to put up $8,000.
Bro, I grew up outside of Seattle. Don't ever gamble on Seattle.
That's my team, bro. Like I'm from Seattle. No, I'm
cool,
betting
yeah.
on, dude. I put
Tri-Cities.
up 8. Oh, I know I love Tri-Cities. I might
that's where
have
I'm
moved back
into,
up
so
there.
I'll labor with you. Yep.
Okay, so
dude, hit me up. I know everyone there. My family's really firm.
I had to invest $8K to win $2K. That's how bad the Seahawks have been doing this season, but I don't care. It was my fun money.
But
so
going back on the point though of knowing yourself, I realize I don't like to gamble, but for me, if I can get entertainment value out of it, I'll do it. So if I go to a casino, I'll take like $40-$50, play some easy slots where I know they're going to pay out big just to keep me there. It's all psychological. I'll put the initial investment, $40-$50 back in my pocket and let the rest of the money ride the night. The only time I ever win gambling is if I don't care because I've already made back my initial investment and I see it as I'm getting entertainment for free. Or if I meet a chick or have a bitchy chick and she's like, hey, let's go, baby. Let's go to the room. And I'm making reckless bets. I won't leave the table. So
yeah, 18-year-olds don't go to casinos. First off, you can't.
Yeah.
So just stay away from them until you become a little smarter.
It's like strip clubs. They're designed to separate you from your money. That's good advice too. Stay away from things that are designed to separate you from your money.
Everything is designed to separate you from your money. Walk into any store.
And your money is your worth. It's your self-worth. It's your time, resource, energy, future goals, aspirations. I mean, we won't get into like financial or accounting topics.
All the liberals hating us for that statement.
I don't care. I live in reality. That's how it is.
I'm clipping that.
Yeah, exactly.
So we're at the mark.
I've got a third point
for sure
tied up. So be curious, educate yourself. You don't have to know all the answers, but once you start getting information, you start having experiences, you start piecing together wins and losses, learning lessons from these, then eventually get into step 3 and create a goal for yourself. We always say, or what is it? We said, me and Paul Benjamin say it in Rich's group. If you can track it, you can manage it.
Ooh.
So if you're 18, you might not have a budget yet. You maybe had a full-time job in high school or something, but as you're out in the world, start tracking your expenses and track everything. Again, you don't have to have a goal at this point. Just start getting an idea of how you're spending, why you're spending, what your triggers are. Like if you get in a fight with your girlfriend, then you go out drinking and then go to the casino and blow $200, then maybe try to avoid things that lead you down that. And then start being deliberate about your financial plan and set goals in.
Because most 18-year-olds don't know their triggers yet. That's I'm actually really glad you said that. This gives them time to figure out what those triggers are. Let's say it is my girlfriend pissed me off, so I'm going to go get drunk or smoke a joint or and spend all my money in this area instead. So understanding those, maybe that's a topic we should even discuss on a separate show.
Yeah, we can jot these down as topics. And guys, we're pretty new, so for the few viewers we have, give us feedback. Let us know if we're onto something, if we're way out in left field. That's how we start to dial in these ideas. But
we got first page results on the last show.
Yeah, nice. I'm stoked about that. That's great.
Yeah. So I mean, all I did was plug in the tags. So all right, let's go ahead and wrap this up, Jaron. Thank you so much. Can you please plug everything of your stuff where people can find you?
Yeah, guys, find me at menshrine, menShrine.com. That is the hub of all my digital online presence. From there, you can link to my YouTube, Instagram, Facebook, Twitter, TikTok now, all of that good stuff. Be sure to follow me on all of those. Engage us as well, because we're just coming out the gate, the way these algorithms work, the more you comment, like, share, even if you disagree with us, that's fine. Controversy sells, especially in the digital world. So that'll help us grow. I'm still pretty premature. I'm offering some coaching services, YouTube video requests, but really the most you can do if you like what we do is just get the word out, help us grow. Modern Slackers too, and that is where you can find me. I cover topics like fitness, finance, online dating, and really just I approach it from more of a mindset and philosophical standpoint. And then once you come into the premium side, I am a nerd. I grew up in a very traditional kind of German ancestry family and was raised.
I haven't seen it yet.
Raised that way. No, I document everything. Unlike Richard Nixon, it's going to get me in trouble at some point.
That's
but
okay.
It's great because I have frameworks, or I have plans and methodologies that I can share with you guys and hopefully save you some of the hard, painful lessons that I've endured. I'm back on track now, but you know what? Where I'm at now, I should have been at 18, which is a good way to wrap this up.
So the guy who started KFC started at 55.
Oh yeah, I'm not worried about it. But Menshine really helps you for guys who are just starting out in this world that might feel lost, that don't have your bearings straight yet, don't really know who you are. I was in the same boat. I've done very well for myself in every aspect of my life. And in Menshine, that's just me sharing my experiences. And then again, from a framework or a practical standpoint of how to go about enacting these changes.
What I'll do after this call, when I end the stream, is I'll reach out to you, Jaron, because I do want to talk about how we can collaborate more with Menshine and get that. Maybe there's some resources I can throw your way, because what you're doing over there is incredible. I mean, that's why you're going to have a big part in this book. So on that note, dude, thank you so much for hopping on, and I'll shoot you a text when this live stream is over. And hopefully I can do some editing. I don't know why it didn't let me last time, and I don't think we got any red flags this time, so we're good.
I do have one last tidbit for you 18-year-olds listening.
Yes,
document everything, track everything, and then write things down. Liberals use the term journaling. It kind of sounds hoity-toity, but you know what? I've been at it I started doing it when I was a kid, actually, like when I was 7. So now that I have 25 years of journaling under my belt, actually, no, I can't do math. I have more. I have almost 30 years of journaling under my belt. You can look back and then see the evolution, see the process, see the errors of your ways, and literally identify your wins, losses, lessons learned, and all that stuff. And that really helps you get your bearings straight, and it helps you be able to help other people, which I think is very rewarding. And, once we blow these brands up, it'll be economically rewarding too.
Well said, Jaron. Jaron, thank you so much again for hopping on.
Yep. Thanks for having me. Appreciate it.
Yeah, no worries. We'll have you on every week.
All right, let's do it, buddy. Yeah, let's try to head to the green room without getting booted.
Okay, let's see if I can do that. Okay. Did I add? Okay, I think he might have been booted. What is going on? Okay. No, I was saying kick guest. I'm not doing that. Oh, well, he's left. Okay, so I'll FaceTime Jaron. Anyways, guys, I want to recap pretty much this for all 18-year-olds. Make it consistent. It doesn't matter what you're investing in. Just start investing. Get in the habit of making it consistent, right? Having Dylan, and he had that idea of Swan Bitcoin, which is really just using cash on hand and making small contributions each week. I just want to make sure that you're putting yourself in a position of power at 25 years old, that you can make a big investment, whether that's a house, whether that's starting your own company. You need to be at that position at 25. And if I could go back and tell myself that, I totally would have, and the problem is, as an 18-year-old, we don't see that. We don't see the future. We see only what's in the now. So I hope that this channel and the people that are watching this that are 18 will be able to take something out of this and see it as a big opportunity, because you're at the golden age of your life. You're at the party years. We understand that you want to get drunk and have all the fun, but wouldn't you rather be in a yacht having fun at 30 than 18-year-old going to basement parties? Probably not, but that's my 2 cents. Anyways, feel free to reach out to us on Instagram, Modern Slackers. You can reach out to us on Twitter, or email us hello@modernslackers.com. And on the website, if you need to book a consultation with one of the Slackers, feel free to. I hope this information helped you guys. Keep it up, become a Slacker, and just keep looking forward, and try to make it as consistent as possible with anything that you do. And on that note, have a great day, guys.